Insurance. Is it necessary or are we just wasting our money? Hello and welcome to another episode of Set Up for Success. Over the course of these videos, we've been looking at how we can set our children up for financial success. My name is Tracey Ansah, and again I am joined with my husband Richard Ansah, and we're going to be talking about insurance. So Richard, would you like to tell people why we should listen to you on the topic of insurance?
Yeah, I guess it would be a good idea. I used to be a qualified mortgage broker, and I also was regulated to sell and advise on all types of insurances, including general insurance and life insurance. So although I'm not going to give any advice today on this particular show or episode, I can definitely answer your questions and help people make a qualified decision regarding insurance in general.
Good. So, is insurance a waste of money?
I know, I hear a lot of people say it's a waste of money, what's the point? It just depends on your own individual and personal circumstance. If you are someone who has a lot of cash in reserve, and if there's any type of financial catastrophe or scenario that takes place where you have to find a lump sum of money quickly to replace or repair that situation or scenario, then you don't need to have insurance. The reason why people need insurance or take out insurance is to cover or protect those things that are valuable to you, whether that be your house, mobile phone. You could be a surgeon and your hands are insured, so if anything happens to you in an accident, for example, at least your livelihood is not affected, etc. You could be an actor, actress. There's so many different scenarios where you might need to have insurance. So the long and short of it is, if you have the funds, then no, you don't. If you don't have the funds, or even if you want to be a bit more wise in how you utilize your funds, then insurance could be a pretty good idea. Yeah. Okay,
thank you. So what are the different types of insurances?
Great question. So we have there's a whole plethora of types of insurances. I'll keep it very, very simple. When you have what we call general insurance, so that would be things to insure your goods, like whether it's internal things in your home, anything valuable. Okay, so we call that contents insurance. You could have a buildings insurance for if you own a home. So we class it under general insurance. You've got car insurance, which is mandatory to have if you own and drive a car in the UK. Then you've got things like life insurance. Then you've got professional types of insurances, so indemnity insurance, which I'm not going to talk about too much, but effectively it's to protect a business owner or an individual who operates in a business, to protect the public from any advice that they may give. So that would be called personal indemnity, or you could have legal insurance. So you can have insurance for pretty much any scenario. Okay, Lloyd's of London, have been around for centuries, and they insured pretty much any situation or scenario that required insurance. I'll leave that there. I'm not going to go too much history, but you can insure pretty much anything. But that's the general classification.
So, do you think we really need life insurance?
Well, I personally think life insurance is a good thing. All right. From the point of view of your own personal situation and circumstances, you could be someone who owns a home, and if you've got a mortgage of any amount, it's going to be substantial, whether it's £20,000, £100,000, £1 million. If anything happens to you, what will be utilised to pay off that loan? Okay, if the equation now starts to get a bit more complicated. If you have loved ones, have children, do you want them to lose out on that home because anything happens to you per se? You could have insurance on the basis of a sickness. If you're unable to work or run a business, okay, will that affect your income? And will that income or lack of income affect your standard of living or the roof over your head? So that's effectively will answer your question. So if the answer is no, you don't have the reserves to cover that, then yes, especially life insurance is definitely a good idea to protect you and your loved ones during the period of you paying off some type of loan on a property or properties.
Good. So what? Who benefits from life insurance? Who benefits?
Well, a good saying is just it's not focused on whether you die or anyone dies. It's more about focusing on the people who are alive. So the beauty of life insurance, if Joe Bloggs passes away yesterday, as I mentioned before, and you've got a loved one, you've got a spouse, you've got children, and you want them to remain at home and live peacefully, then that life insurance ideally will pay off the loan, and there's no complication. Let's look at things like funerals. Believe it or not, they're very expensive. And again, if Joe Bloggs passed away yesterday, who has the burden of finding the funds to pay for a burial, finding a plot of land for £7,000 or whatever it might be today in London or wherever you are around the world? Then you've got the tomb, the whole stress of planning a funeral, let alone dealing with grief. If the funds are not there to pay for it, or you've got to put stress on the family who are already under stress just to survive, quote unquote, is that really fair? So when you look at it from those points of view, it's actually very prudent to plan in advance. And the earlier you take it, the cheaper it is, so the better it is for everyone.
Brilliant.
Yeah.
So my final question is, when is the best time to buy insurance?
Well, I'm going to ask that in piecewise, because what I haven't touched on, which I think is really important, is you've got life insurance. In that bracket of life insurance, you've got whole of life insurance. Okay. And a lot of people don't really either understand it or are aware of it. But in terms of having an asset to pass on to your children, to your loved ones, whole of life insurance is fantastic. Most people might take it out just to plan for inheritance liabilities, pay for funerals, or something general like that. But if you were to take it out at a young age, the statistics that you can check out yourself, do the research, and you had a 50 grand lump sum in your 20s or 30s, and based on a loved one passing away, okay, and you invested that £50,000 for 40 years, that could produce you, on a basis say 8% return per year compounded. That could be well over £1 million. All right. Now, I'm looking at it from the point of view of inheritance to leave on to not just your children, but your children's children. And whole of life insurance is a pretty much surefire way to produce 50 grand, 100 grand, whatever you can afford. Obviously, the earlier you take it out for the period of your life, not the average person couldn't save that £100,000. You couldn't just save that in the bank. No bank is paying you 8% a year. All right. So even if you were to invest that, it'd probably be about the same amount of money. And again, it's not guaranteed. So whole of life insurance guarantees to pay out X on the event of a death. So it's something that's worthwhile looking into from the basis of wealth creation for your loved ones. Okay. Again, I'm not giving advice here, but it's just an idea for you to switch to open yourself up to and to switch on. And in terms of did you ask about the benefits of life insurance, or was it the age? Sorry, you know me already. I crack on talking, and then I forget the original question.
I said, when is the best time?
When's the best time? So I answered that already. The sooner the better, over the age of 18, obviously. And then I haven't touched upon things like sickness. Whether you believe it or not, we live a lot longer in life now because of medical science. However, it doesn't mean that the fact you can live gives you the ability to work for long periods of time. Okay, so if you had an insurance to cover you for a critical illness, again, that takes away the burden from loved ones. So if you or Joe Bloggs was the main breadwinner of the household and wasn't able to work based on an accident at work, and let's just say the employer's insurance only lasted a period of time, say 6 months whilst you're out of work, and you still couldn't get back to work because of injury or illness or sickness. Okay, so you haven't passed away, so life insurance won't kick in, but you're not able to work in your current or career or job, whatever that might be, whether it's behind a computer or practical, it doesn't really matter, but you're unable to go and provide an income for your family, then you need something called a serious illness cover or critical illness cover. That in the event of an injury or in the event of a sickness, and there's so many different scenarios, whether it's Alzheimer's or a skiing trip accident or diabetes, I don't know, there's so many different types of situations today that, and provided that the insurance covers that, and you need to speak to your advisor the difference between critical illness cover and serious illness cover. There's very few providers that work on serious illness basis, and the serious illness cover is actually, I think, much more comprehensive, covers a much wider range of illnesses, and gives you the option and choice to claim on X amount of money at different periods of your life based on different illnesses that may come at different stages. All right, so that is very important. So ultimately, the insurance is based on risk and probability. So the younger you are, obviously, the cheaper it will be. Yeah, and anything to do with wealth creation or protection, or anything to do with wealth per se, is ultimately based on speed and timing. So the sooner you get involved, the better. All right. So I like to look at that. This equity aids the vigilant, okay, and not those who sleeps on their rights. So those who leave things to lastminute.com because you don't think it's important, it's not necessary to think about death now, money in my 20s. That could be right. But again, if you're in your 20s and you're earning decent money now, and you have loved ones that are depending on you, then wouldn't it be responsible to think about protecting that income or even increasing it for if anything were to happen to you in any scenario or situation?
So what if you don't have any dependents? Is it worth getting?
It's not just about dependents. I mean, whether it's children, whether it's parents, whether it's a spouse. If you don't have any of those situations or scenarios whatsoever, which I find that quite hard to comprehend in this day and age, there must be some cause that you believe in, or someone that you love, who you'd like to provide that, give them a benefit or a gift in life for them to proceed. You know, you might be from abroad and you've immigrated to the UK, or immigrated to the UK. You might want to send money back home. There could be so many different scenarios. That's what I'm trying to say. Ultimately, it gives you food for thought as to another angle, if you've not considered it, to protect your loved ones wherever they may be around the world. Okay. Yeah. And the other thing I would like to mention is the tax implications. And when I say tax implications, I'm talking about inheritance. Ultimately, inheritance tax is not based on age, unless you're under the age of 18, which again, technically, you speak to an advisor on that. But inheritance tax is on the basis of a transfer of wealth or money going from party A to party B over a certain threshold. So with life insurance, sometimes they do take into consideration lump sums of money. And it's always good to consider putting that into a trust. Again, speak to a professional advisor who's regulated to give you that type of advice. That will take it outside of your estate. And so if it's outside of your estate, you've already defined, whilst you're alive, who you want that money to go to. Normally when you have a job, they have death in service insurance in most corporate jobs, and you would assign it to go to your brother, sister, husband, wife, children, whatever. That's not technically in trust, but you've assigned a beneficiary. So you can do something similar to a life insurance policy and put it specifically in trust, so it's outside of your estate, i.e. it's not in your name. So it's outside of any tax liabilities, outside of any control, and it also allows for speed in the event of, unfortunately, bereavement and death. Your loved one's going to get access to that kind of income very quickly, which is important, especially if bills need to be paid, mortgages need to be paid, etc. All right. So again, speak to your advisor. If you don't have one, then feel free to contact us, and we can put you in touch with some good advisors who will help you. But yes, that's the only thing I wanted to mention.
Good. Thank you.
No problem.
So I hope you found this video useful. And as Richard said, if you have any questions or any comments, please feel free to put them beneath. Also, please like, share and subscribe to this YouTube channel. And until next time, thank you for watching Set Up for Success.
Thank you.